Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. From the technical point of view, we do not have a lot of new information. So on Friday, as you can see, market actually has formed the inside candle compared to the Thursday action, and market is still calling it so-called vital area. So as we said, that will be very important, decisive point for the gold market, because market stands at an area where it's really big market tension exists, and it needs just to pass through the 1750 resistance to trigger stops and to trigger the significant upside momentum where new traders start to buy the gold. So traders actually wait for a breakout, because as we talked about it earlier, on the high time frames, on the monthly, on the weekly, market has no barriers to proceed directly to the 2012 top around 18 even, and even to the 20,000 area. And that's possible. Actually, this is the suggestion of the Goldman Sachs as well. So they think that within the year and a half, the gold really could reach these areas. But market needs to make the final effort just to force and to win over the resistance that stands right now, and the 1750 consolidation, and break through this level to trigger the new inflows of the traders on the gold market. Because as we estimated today, while the short-term speculative position has dropped, the long-term traders keep long positions, because the SPDR fund shows the rising of the reserves within this week and the significant increasing of the reserve. It means that mostly here position is changing by the short-term speculators in this area. Fundamental background, as we have estimated today, and the fundamental part of the analysis is also friendly to the gold market, because major three factors stands. First is the situation with the virus, because it's full of the uncertainty. Nobody knows whether the first wave is over, whether the second wave will be, and what stands within the pill or vaccine on COVID-19. Now new rumors come from the Asian, from the China, and the new splash of the virus have been estimated in India as well, and Europe also stands under control, but it's too far from the final point, especially in the United Kingdom. So this full uncertainty, that's in general supports the gold. Second, tough political situation in the world and in the United States in particular. So Donald Trump is currently, keeps under control, but is, losing the control of the situation inside the country. It's really problems that all achievements that have been made by the Donald Trump in the first term now, ignoring, because now he's accused in the weak reaction and the bad measures, poor measures against the pandemic. It's accused in the unrest in the countries. It's accused in the weak foreign policy, especially in direction of the China and others. So that gives the chance to Joe Biden to get the lead in the president's rally. So currently the polls tells that Joe Biden stands in a few points against ahead of the Donald Trump, while just a few months ago it was behind him. So, and Donald Trump needs critically some achievement, some breakout on any sphere, either it's inside the country or at least in foreign affairs. This would be better in both directions. It strongly needs it to get the control over the situation and return back in the president's rally. So we will see what will happen. And finally, the third moment is pure fiscal economical measures. So you can't print the 10% of the global economy without any consequences. That's obvious. And currently rally on the stock market shows the hidden inflation in the United States dollar. It's rising just because the money is too much on the markets. Gradually, this inflation come to retail sales. First, it will be expressed in rising commodity prices, then it will be expressed in the rising expenses of the companies, and that in turn will lead to the rising in the consumer prices or lack of some goods. It's hidden inflation. It's also possible, for example, the Yale's university professors suggest that that dollar could lose 35% of its nominal value within the couple of years. So, and that's really could happen because of the processes and political processes that we see currently. That could accompany the financial process, economical process that we see. All these three big factors support the gold in a long-term perspective. Maybe it will not lead to the explosive rally, but it should let gold stay on the surface and even show gradual upward continuation. That's really possible. Well, speaking of the short-term situation, we return back to the pattern that we discussed previously, and market stands in a decisive and tricky moment, because moving above this area and coming back to the 1750, 1760 suggests the failure of the hand shoulders and explosive rally to the upside. Downside action here could suggest deeper retracement to the 1645. It's possible, but definitely it should be triggered by some news headlines that should be released on the next week. Second, to prove the bearish context in the short-term market has to drop below the 1690 area. Because currently overall shape of this pattern doesn't look too bearish, because, well, here we have the fast acceleration on right arm. That's not good for the bearish pattern. Here is actually the bear should control the market. But here we see again the fast rally up from the support, 1687 support. Because for the bearish market it should be enough, pull back to the 17 even area, and then market could drop further. But this hasn't happened. The market climbs as far as the 1740. That was suggested by our scenario, but, well, still, this is the sign of weakness for the head and shoulders pattern. On the 4-hour time frame chart, we have few scenarios how market could move higher and why market has to pass for the 1690, but it will not be sufficient just to pull back out from this. Just because, guys, we could get the reverse head and shoulders pattern as well here. For example, market here could show some pullback down from the 1740, 1745, because we have here the XOP target, market starts retracement. This retracement will not break the bullish context until 17 even area, because here we could get another minor pattern inside of the larger one, and some, you could call it as cup and the handle. Somebody talked about reverse head and shoulders. It doesn't change the core. The idea, if the retracement here and then upward continuation, final breakout of this area. That's why moving to the 17 area doesn't mean yet that market is dealing with the daily head and shoulders and starting in tendency to 1645. This will be obvious only when the market will break through the 1690. Will break this level and start dropping back to the A point, erasing of this upward action. In this case, we could say yes, indeed, market is coming lower back to the lows, and probably we could count on the another leg some ABCD pattern here to the conference support and reaching of the XOP of this ABC top pattern. Until this will happen, breaking 1690, it's very difficult psychologically to take the short position, because we do not have clear bearish patterns on the intraday charts. We have fast action here, which doesn't look bearish at all. And bears currently only could blindly trying to sell based on this head and shoulders, with the stop somewhere above this area, above the XOP on the fall different chart, above this level. But guys, this could be some kind of the pain or gain situation. So if you will be correct, indeed you will get best entry point, good result. But chances that will be positive result currently are not really significant. So this attempt could be costly. Anyway, you will not lose more than your stop will be. So for the bulls, yes, we could get the immediate breakout here for the XOP, In this case, we intend to use the stop buy order closer to the 1757, somewhere in this area. You could take the buy entry order, buy stop order. And if it will not happen, the market will not show the immediate breakout, we will be watching for the 17 even area and see what will happen here. Because that will be a potential point where the bullish reversal could happen next week. That's our technical view on the gold market.